What is going on, Algo fam, coin traders? How's it going? Thanks for joining me for the show. We are diving into Algorand ALGO on that ticker. So this is the first video that we have covered since finding our new all-time low right now for Algorand at 9.14 cents. But if we talk about an overall low, we actually have a low of support, which is kind of where we're going to find our base of stability since we haven't had the price close below this level. So price right now defending the 11-cent level. And so other levels of support that we are looking at right now coming in at 11.39. And then just above that is going to be 11.85. So these are extremely significant levels that we're dealing with right now, especially since we have been dipping and trying to maintain this level of support as we do maintain higher lows on this bounce, despite now forming a lower low on this daily chart below our top so far coming in at 14.09. But with the base of supports, what are upside overhead resistances? Well, right now, big level of closing resistance is coming in just shy of 13 cents, and even right around 13 cents, we're seeing a price level resistance as well. Next level overhead, 13.28. So those are going to be our big points up overhead, especially now forming this tightening pattern that we have seen defending the lows of support, but also now starting to see pretty serious rejection from about 12.85 up to about 13.28. Now, I want to switch over really quick to Twitter and talk about a post I made at the end of May that pretty much just highlighted the downside potential targets for Algorand based off of a Fibonacci logarithmic extension. So essentially the way this works, as you can see, the magnitude of the initial pullback, and then we use that as a target to the downside, and that does meet up with our 100 Fibonacci extension level. Obviously, this would be right about 1 cent, and we don't think that's necessarily a target, although that is the 100% Fibonacci logarithmic extension to the downside. But our initial target was for the 61.8 at 12.05, so we obviously hit below that and are now defending that level of support. And so we are getting pretty close right now on the current price at 12.09. So that's been one of the extremely key things that we have been looking at. So especially when we talk about this weekly chart, which we'll look at here in just a second, we can see a lot of similarities and great things on the defense of a lot of those downside targets. Now, does this mean that we're already at a bottom? Potentially, who knows? But it's not a guarantee that we're not still going to see lower lows, especially since if we do zoom out, we're actually starting to see a little bit of a fractal forming up with basically what we saw pretty much right around the time of the Algo kit launch, a very nice bear flag before the final pullback that did push us down to the all-time low. So if we actually can't get above this 50-period exponential moving average, that actually would shape up to be a little bit more of that tightening formation pattern, which would still be a continuation to the downside, and likely in that instance would still be tending to a break bearish anyway. But that's why we do typically focus so much and heavily on what a lot of the upside resistances are looking like, because if we do get a breakthrough of those resistances with a very nice volume and continued follow through, then that's going to be our sign. That's pretty much going to confirm the 9-cent level as being one of the bottoms, at least for the time being anyway. Okay, so like we said, flipping over to the weekly chart now, and actually going to flip over into the logarithmic scale because I think it's a little bit more of a better, clear picture of what we are looking at, since obviously the pullback's been pretty substantial here lately. So in the weekly right now, we're forming the third week so far of inside bars. So the first week had the biggest trading range, followed by the week after, which did have prices sitting in between and inside of the previous week's trading. So that's exactly what we're seeing here on this third week. So essentially what we would love to see is the bears actually not following through to the downside, the bulls maintaining a very small body that would actually fit inside the bullish body of this nice bullish candle. And then from there, showing a little bit more of that bullish follow through, which would end up breaking prices to the upside. So right now we would need to see, assuming this candle closed on the current anyway, even though we do still have about just under 4 days left, would still need to see a candle close below 1304. So if the following week does get above 1304, then that would be our nice bullish breakout for this weekly inside bar pattern. Typically, once we do see a breakout from a weekly inside bar pattern, we typically do expect a little bit more of that follow through, because in that instance, we are likely to get a direction change confirmation. But obviously, if this does end up breaking bearish, then we're likely going to be coming down to retest the all-time lows right now. Because if we do still zoom out, we're very much following these weekly exponential moving averages, both the 12 and 26. So you can see we haven't even gotten anywhere close to the 50 period yet. So even if we actually turn that exponential moving average off, you can see that we're just following on this weekly all the way down ever since having this bearish cross, and price has been rejected from these EMAs this whole way down. So since we are now situated below the 12-period weekly EMA, that actually strikes that as the resistance point first. And so typically, as you can see, once we fall below this 12-period EMA, that always becomes a big resistance point on the way down before finally establishing a support to break it, in which case then the 26 period is going to become that next major point of resistance. So even if we do get a current bullish breakout on this inside bar formation for the weekly chart setup, we're still looking at a lot of resistance, both in terms of the exponential moving averages, but then also in terms of a very big price level. So we can even see this effectively starts at about 15 cents and will run up to the previous low at about 16. So you can see several points of not only closing support or previous support anyway that would flip into resistance, but also points of price level rejection. So that is what we are expecting, even if we do see a bullish breakout on the current weekly pattern setup, which also still intersect these 12 and 26 period exponential moving averages. So that would be my expectation right now, is that a bull break from this inside formation, this inside bar formation, would get stuck up at probably realistically 15 cents first. And then even if we do see that level break, then 16 cents going to be our very big next level. Likely I would experience a period of rejection in that instance, pulling back, setting that weekly higher low. So now I do want to flip over into the 2-day and do have the time-based volume pulled up on the bottom here, specifically just to look at the amount of volume that came in off the start of the year rally versus what we have experienced ever since on these flag and continuation patterns, to pretty much paint this picture of we need to see this much volume in order to actually get just this much minimal upside. And so when we don't see that on all these continuation patterns, that is what typically leads to a little bit more of that bearish punch that does have the bearish breakout and continuation happen. So typically, my expectation is that if we were going to see a lot more continued bullish upside for the longer term, we would have seen a lot greater sign that this was the bottom by a lot of bullish buying volume on the bottom. But since we actually haven't seen that, that does pretty much lead to a little bit more of that speculation that we are going to enter this little bit more of a consolidation pattern, which likely is going to favor a little bit more of that bearish break and test some of our lower supports. Now, we are in the middle of the governance period sign up right now, which a lot of people typically think does lead to a little bit more of a rally and pump, for the price of Algorand, but effectively we never even really see that follow through, especially in any significant and meaningful capacity. And so just for reference, the last sign up period was at the beginning of April, which we can see on this line right here. So as you can see, price still didn't even show any sort of continuation and follow through after that. So now that we are now into the next quarter for signups, we're probably going to get the same type of pattern where we could get a little bit more upside, but likely we will see plenty of rejection and resistance at the levels that we've already established up overhead. It's kind of more of my expectation and prediction right now. So even if we do rally up this rising base of support, you can still see that we're not necessarily going to get that much higher, especially since we do have a falling trend line between all of these supports and this previous resistance. So apex for this formation would actually be coming in about the middle of August or so, but likely breakouts typically do happen before that. And so again, this doesn't always have to be a bearish breakout, but we do need to see that volume and a lot of good reason to believe that money is going to be flowing into this Algorand space in order to get any sort of bullish reversal and movement to the upside there. Otherwise, overall interest is still going to remain low, and it's very probable that the downtrend is going to continue unless we get some crazy type of reversal for the rest of the altcoin space. As always, though, nothing in this video is financial advice, and would actually love to know everyone's thoughts, opinions, feedbacks, disagreements, all that stuff down in the comments sections below. Do love getting back to each and every one of you. That is going to be wrapping up the show today, though, so hope you all enjoyed our current analysis on Algorand after finding our new all-time low. If you haven't done so just yet, would appreciate you hitting that thumbs up, like, and subscribe button. And do always appreciate all the continued love and support. It does mean so much. But with that will go ahead and wrap us up. Hope you all enjoyed. Stay safe, take care, and I'll catch you back in the next video.